Good evening, everyone. Welcome back to the discount. Today is Tuesday, March 21st, 2023. And as always, let's get out of the Lazy Day Trader channel and go right into some charts. So let's look at the daily chart on the SPY, which is the proxy for the S&P 500. And what did we have today? Well, what a up day it was. It was up 1.3% on the day. And what were we saying? Well, obviously bearish below, bullish above on the big daily trend line. But this broken head and shoulders, which got invalidated from the, what was it? Thursday, March 16th, when it closed above, now, again, just let's zoom in here. This is when it closed above. It broke back down. It found resistance at our day trading short level on Monday that we did not get filled on, or at least I didn't. Maybe some of you did. And now look what it did. It broke above, and we're going into the Jerome Powell Fed announcement, the ridiculousness of what is going on in the banking system, and how much Jerome Powell has pumped the markets full of liquidity back from 2020 and pulled it right back out at the start of 2022. So we're seeing the obvious effects of that right now, and we don't know what we're going to get tomorrow. But markets are really just kind of in low volume float mode, and I'll show you this on the charts. The volume has been kind of light, or at least in the morning, the volume was much lighter. And towards the end of the day, it's increasing. And kind of what that is telling you is, are we possibly going into a pump the markets up, get a head start, and then blow off here into the stratosphere, or at least a decent rally? You can see the QQQ chart, which is the proxy for the NASDAQ, is in a much more bullish position than the SPY. And what I want to make a comparison to here is March 2020. So in March 2020, when everyone was scared and everyone was bearish, I want to show you what the market leading indicator was doing. So this is the Russell 2000, which shows you typically where the markets are going to go before they even go there. That's why it's a market leading indicator. Why is that? It's the highest risk products and companies out there, all bundled into this ETF. Obviously, right now, it is being affected by the banking sector. So, what position was this in back in, let's call it October 2020? So Thursday, October 2020. Let's go to where the Qs were in October 2020, right? So this was the COVID bottom, March 2020. This was the COVID bottom for the market leading indicator, the Nasdaq, March 2020. Now, where are the Qs? The Qs in August were way above the pre-COVID highs, about 30%, 26, 27% above the COVID highs, right? The pre-COVID highs, while IWM, let's do a measurement here, in October 2020, we're still down. We're still down 9% on the year from the pre-COVID highs, okay? But the market was melting up in this time period, and everyone was in crypto, was going crazy, the meme stocks, everything, while this was still lagging behind. So what can this be telling you right now? Well, I believe that this is telling you, and the Qs are actually leading right now. This is telling you that while there is weakness in the system, and that is going to be foreshadowing later on down the road, what it is telling you right now is it's risk on, because the Qs are breaking out of their trend line. And this is a monthly chart. But if we go back to the daily, they're breaking out of their trend line. The spiders are still hugging their daily trend lines. See, look at this. If we zoom out a little bit, the spiders are still hugging their daily trend line, and the Qs, which is the Nasdaq, are in a more bullish position. So this is just straight up telling you that it is more risk on, and the IWM is telling you, okay, just like 2020, there is more weakness ahead in this market. Okay, however, we're not ready just yet. And that's what I think is going on just at the current moment. Now, this can change on the drop of a dime, obviously, with the banking failures going on. However, I really don't think the Fed has any other position than to provide liquidity to this market. And look, either way, that's going to be a bad scenario. We are going to most likely see much lower lows on the NASDAQ. We're going to be seeing much lower lows on the spiders, and we're going to be seeing much lower lows everywhere else. That includes Bitcoin. But however, let's get into the Bitcoin chart. So what's interesting is gold had a pullback day, and so did other metals and commodities. However, Bitcoin was up. Now, I understand, the Bitcoin crowd is going to say, well, because it's the new gold, yada, yada. But I believe this is up simply because we are going into a risk on type of environment, or at least that's what it's telling you. It's telling you, hey, we are foreshadowing more liquidity in this environment. Now, can that turn around at the drop of a dime? Could this be a sell the news type event? Absolutely. We can go ahead and, in fact, we fill this gap, which we haven't. We're kind of eating time off the clock. And if I do one of these tomorrow, obviously, it could be a non event. We could go fill that gap, or it can be kind of a big event where Jerome Powell says, all right, well, we're going to have to continue hiking. We don't give a crap. As long as Bitcoin stays above this, I think it's got higher to go. Now, how high, I couldn't really tell you just at the moment with everything going on, and it's a very risky situation. I think if this goes right into this gap and higher, I think that is a good risk reward for a short setup on Bitcoin if you so choose. So that is a good risk reward just for a scalp or a swing trade down for the other direction. That doesn't mean necessarily, though, that this structure is broken. I think that as long as we stay above 25K, we are in a good situation on Bitcoin. It could simply come back down even tomorrow and fill this and start climbing again and be okay in a decent situation. Okay, so that's what I have on Bitcoin, guys. It's a very healthy looking uptrend, little extended, but that doesn't mean it can't keep going. Now let's get into the Laser Day Trader channel. That's the track record for today. It was Tuesday, obviously, March 21st, and I provided a little history lesson. This was actually the day where one of the newspapers called the top in the dot-com bust. I just like to add a couple things in the morning to have some fun. Now let's go into the SPY. So let's go right to the numbers. So what I had called out, and I think the best spot on the board is the big fat round number of SPY 400. Okay. 400 to 401 is the short, and I'm giving you the stop above 480. So if you were looking for a dollar or 75 cents out of this position, you would stop out of about 80 cents. So it's a good 1-for-1 risk reward, and it's a max extension move on the SPY. However, what I was seeing as the market kept going was we have a good first spot of overhead resistance. Now, there's a difference between the trades that I dead set call out and that I'm going to call out for the channel and that we're going to take. And then there is going to be some in between numbers because I understand there are traders out there who want more action. I mean, you're sitting in front of your computer, I get it. However, that is what these are for. So you could do a much, much smaller position size and look for a bigger gain and a bigger risk reward on these types of trades. So 397.90. What I want to show you is look how well that these numbers worked. So 37.80 right out of the gate. Let's zoom in here into these numbers. 397.80 right out of the gate, and that gave you a full $1.80. So if you wanted that trade and you could have done a smaller position size, go ahead and go for it. I'm just calling out these resistance zones so you can see how well the numbers work. And I even pointed out, let's go back. The target was going to be, right, you want $1 at least, and then get back to 396, right? So look at that. I'm setting up the scenario for the day, and they actually just did the number just as I prescribed. 397.80 went back down to 396. Now I get it. It's not one that I'm going to be putting on the track record. It's just some action out there for anybody who wants it. So there you go. I posted the chart on the board. She couldn't close above, and she's finding resistance there. Okay. So good trade for everyone who took it. And we were waiting on some opportunities in gold and NEM, and they just did not get to their spots. But one of the charts I want to show you was Intel. So I had a spot on Intel that we were going to take, but it just did not get there again. It's a slow day. Let's go to the Intel chart here. I want to show you just a little bit of a lesson where I got this number from and what it's doing now. So you draw a fib retrace from here to here, and the level was about, the level was about 2761, and I was actually going to take it a little bit higher, but this was the number on the fib retrace. And what is it doing right now? Right now, it's in a bearish pattern, and it's eating time off the clock and did not want to get there because it's eating time off the clock, likely to get below that important number, perhaps spike all these moving averages and get to this 618 retrace at 2693. Just about. That's what I think is going on, guys. That's what I'm reading. However, it just did not get there, and that's okay. So what else on the rest of the day, guys? I think we're just waiting on the Fed. Not much else to go over. Again, the Russell 2000 is a market leading indicator, and it's telling you that there is weakness in the market. But when there's risk on for the time being, that means risk on should be bought on pullbacks, but also sold into resistance. And I think we can get, if we get a significant rally, we can get all the way back up to 360. I already called that. But I think there will be stopping points along the way. Let's get rid of that. The stopping points along the way for me will be a little bit higher. And I believe that they will probably run out of some steam somewhere around 325 to 330, in my opinion, and probably pull back. Now, that doesn't necessarily mean that it's a short for everybody, but it's certainly a short where they can do one of these and then get to my ultimate target of 360 and then go down. Now, that's just one scenario. Obviously, if things get nasty and we just get a huge reversal day and we start closing below this 296.91 level and we can't do this, so we just see time off the clock and we just go. Okay, well, obviously that is a scenario that can happen with the bank failures. So that is the synopsis, the thesis. That's what's going on for today, guys. I hope you have a great rest of your night, and we'll see you tomorrow in the Lazy Day Trader channel and see you on the charts. Take care.